Hello everyone, Jesse Webb, Traders Pro. Market conditions, bullish in a bull market. Still continuing that overall rally. We've had a big uptrend here now for the last couple of days. Our long-term overall signal, remember that we're looking for direction of the overall trend. And in this case, we've been currently in a bull market, but we're pausing a little bit here in that bull market, at least that long term. And then this reactive move that we've got now is confirmation of that continuation of that overall uptrend. We're reaching some upper limits on this short-term trend. Let's take a look at momentum, where we've shot straight up to the top here. We know that once we get up to these extreme ranges, they just don't sustain. They pull back into the bullish trend. So when you see this and it says extreme bearish risk, it doesn't necessarily mean that this is going to reverse all the way back down. What it means is that it's just gone too far and it needs some time to consolidate. And as that does, this will start to move back inside of this buy zone, this trending zone, creates a more sustainable location for support, and then some uptrend. It'll continue to move back up this direction. We'll look at the support areas on SPY here as well. We've seen breadth now bump up into this upper momentum range also, which is nice. And then sentiment also, which is really what we want to see. So we're extreme a little bit to the upside on momentum and could use a little bit of a pause here. Buy-sell ratio moved really nicely in the last couple of days. We're up to 3 now on the buy-sell ratio, so solidly bullish, but extended a little to the upside. Our sentiment also is giving us that reading where we've got an upper range of now almost 85. And historically, once we get to these ranges, it just doesn't stay there. It doesn't last. So but you can also see it can bump up a little bit higher into those ranges, and then watching for some kind of a pullback, maybe to this halfway, this 50% line, and on sentiment. If we look at S&P 500, in fact, let's look at the indices here. We've got the market ETFs tab, which is nice looking. We've got really everything up across the board in terms of the things we want to see up. Volatility is down, bonds are up. NASDAQ, Russell, S&P, Dow, everything is in an upward trend currently, and had a 2 or 3% move this week, which has been constructively bullish. We also are to this upper extreme range on S&P 500. This 6-month time frame here now, this is currently the trend on the 6-month time frame. So we've been working against that and moving higher, and we've got this support area now around that 451 range on S&P 500. So again, because we're extreme, we've had a big gap, a big run up. Doesn't mean that we're going to immediately reverse. It just means that we could get a whole lot of nothing for a day or two. What are we at? Thursday. So Thursday, Friday, and then maybe into next week. We'll see how that works. But we've got a couple of support areas we can look for. That solid 440 range. We should certainly hold that level above that 440 range, even a little higher, where we've got this support area around that 444 range. That's on the 1-year time frame. If we take a look at that that's the 6-month time frame. That 1-year time frame is a little bit deeper retracement, is now back up into that momentum zone. Momentum zone, he tries to say, momentum zone is this upper range of this chart pattern. So you have this low of the trend, you've got this high of the trend, and then as it's retracing back this direction, if it can sustain this area, this 236 area, that is a momentum location where it'll typically continue to move inside of that range. It may retrace, but it should stay in that upper level. When it doesn't, and you get a deeper retracement, then we're looking for some support bars, which is really what the S&P 500 has done right here. As we had that retracement, now we're in that upper momentum zone. So good opportunities now to continue to build out watch lists, look for stocks that are leading. And the place to start when we're in an uptrend, or really any trend, is to look at the sectors and see which sectors are leading. Construction has been leading, and it's been leading really aggressively. All these home builders just went ballistic when we had the interest rate, or the CPI number the other day, and they'd already been starting to move higher. MPTI, nice move here on this stock. Again, extreme now. We're seeing this really across the board on a lot of these home builders now. up in that extreme range. Good confirmation to early trends, but could use a day or two or three of a pullback. Beezerholm, you can see how aggressive those moves have been across the board. Pulte had a huge move. It's just crazy. It popped, this entire counter trend rallied and erased in just a matter of weeks. So markets can do what they're going to do, and they can certainly be aggressive and volatile and in both directions for sure. Let's take a look at some muscle stocks here currently. Actually, let's jump over to the sectors because we did look at sectors tab. This is also a nice looking pattern when we have everything green. We just don't have healthcare and energy quite yet, but energy, that's fine. Keep that thing low. Keep the gas tanks full with cheaper gas, right? Commodities, we've got gold. We've had a big run in steel, which has been a lot of times when you get a move in steel can act, not always, but it can act as a barometer for the economy because you're getting, if you're getting a additional demand for steel or additional buying of steel, that typically means expansion or growth of some kind. And so steel prices moving higher. Gold is on a retracement, had a little bit of a bounce here off this 382 yesterday or 2 days ago and is holding that range. Up above 182 is going to put it back in that momentum zone and probably put us back into that bullish range. This is where we kind of get that non-trending range where we're stuck right here in that middle off of a counter trend, off of a retracement of some type. Oil has also been a pretty deep retracement now. It's bouncing around that 618 zone. It does have a longer term uptrend. So if we look at that on the 1 year time frame, seeing that, find some retracements and some support. So be watching, that gold or oil actually has quite a good bullish pattern here moving forward. We could see a continued rally in oil. Watch for your oil stocks in the scans. Let's look at some of the new buy lists today. We've got some retailers that are moving in there. MNSO on the 1 year time frame, you can see it's holding that momentum range. It's got the swing high, swing low, and it's still up in this upper range. It just keeps bouncing off of that. That's what we want to see. We want to see that those momentum stocks holding that range, holding that price pattern as it's moving from left to right. And then any retracement that we get, we want to see it still maintaining inside of that momentum zone, ideally. So a bounce, a pullback, and then more confirmation to the upside, and then a bounce and a pullback and more confirmation to the upside. Okay, that's the idea. And once that starts to break down is typically when we will exit a stock. So let's take a look here and see SVRA, 1 year time frame, medical drug stock, also in the upper momentum range, $3.66, and it's a high flyer. It can move aggressively from here historically it's gone back from $1.50, $1.30 to 2.5 retracement, moving higher and watching for that. We can back test that and see kind of what that looks like in terms of price pattern here, 176% off of 2 trades for that stock. So back testing gives us the ability to just look at the characteristics of a stock's trend and how it reacts inside of the TradersPro system. So we could say, okay, in the last year, each of these new buy signals has produced pretty well. The current one is down, but the current open buy signal on this is just the last couple of days. Actually, let me go into the 6-month chart because the open buy signal, the back test is going to pull in. It's only going to measure a stock that has the first buy signal after a sell signal. That's what the back test will look for. So in this case, this was the buy signal. It still hadn't been given us another sell signal, so it's still an open trade. So this would have been that buy signal. That's why it's showing an open loss of about 3% because this would have been the entry and some volatility, and this is currently where that's at. So it's a nice tool to be able to look at and say, is this the kind of stock that I want to be able to focus on? Is it too, does it trend well? Is it too volatile? Sometimes you'll have stocks that are really, really choppy and they're not smooth trending stocks and they just don't back test well. So you can just ignore some of those in terms of looking for the characteristics. It's obviously not going to tell you what it's going to do in the future, but what it does tell you is its performance characteristics in terms of price volatility and how the stock's characteristics act. Typically, when a stock has a characteristic, it'll continue to hold that characteristic. And and you can utilize that back test to be able to focus on that. SVRA, let's move along here. GOTU, 1 year time frame. This is pulling in a high rank stock because of this last move. We've seen that on a lot of on quite a few stocks where they're very volatile, they're very jumpy, and they just don't break to that counter trend or that upside momentum move. This one's still a little bit deeper on that overall pattern, that 1 year or that 6 month time frame you can see, but it's coming to life and may have an opportunity here on that. It's one of the things in rallies, as you see, some of these stocks that haven't moved start to move higher. ELF, this actually is a stock to be aware of because this is one that really has had a fantastic couple of years and has had a deep enough retracement now back to that 382 on the 2 year time frame, back to a 50% on the 1 year time frame, and then some confirmation back up. Now, a lot of traders don't like the confirmation because they want to say, well, why didn't you buy here, or why didn't you buy here, or why didn't you buy here? Well, that's 2020 hindsight, and you certainly could do that by trying to buy in this location. The value with a little confirmation is now we've got this entire block of price activity that acts like a giant, massive floor right here. Okay, so all we need to be concerned with now is what the stock is doing right now. Yes, it had a big run up, so it's a little bit extreme, but any pullbacks now, watching for support to hold inside that range. And if it can maintain that bullish momentum area, then it can provide an opportunity for some continuation to that overall uptrend. So don't get hung up on the idea that, oh man, I should have bought right here. I should have bought right here. Well, next time set up a strategy to buy it at the exact support zone. Okay, it's going to be early entry. It's going to be, some people call it wholesale trading, where you're buying at the wholesale pricing, and some people call momentum or breakout trading retail trading because you're getting in a little bit late into the game, but what's the point in buying into a loser if it just continually drops down? That's your risk. Your risk is that it may or may not hold this level, and it may or may not hold this level, but we've got a lot more support now to be able to, there's a whole bunch of buyers right in here. They're not just gonna roll over and let this thing die. They're going to continue to add into positions, more than likely if they're large institutional companies, into this location. That's going to do it for today's update. Nice market conditions, a little bit overextended, could use a little bit of a pullback here, but overall looking good currently where things are at. If you don't have full access to the site and software, you can sign up with the link below, and we look forward to having you. Have a great day today.